General Motors out with better than expected results and rather upbeat guidance. Let's welcome in GM Chair and CEO Mary Barra, along with our auto correspondent Pras Subramanian. Mary, always nice to snag some time with you. Big year for your company. You know, you really brought that to life in your letter to investors here this morning. But I think there's going to be a lot of focus on this guidance given everything going on in this world. And really two words stood out to me on this earnings release. You all are expecting a stable policy environment this year against a backdrop that kind of seems unstable. I mean, what gives you the confidence to put something like that in the earnings release?
Well, first I want to start and comment on 2024. I couldn't be more proud of the GM employees and then our partners, our suppliers and our dealers that helped us deliver such a strong 2024. And it all starts with our product, both our internal combustion engine and our EV product. So as we look to 2025, we think we can build on that strong foundation. It's what we do, build great cars, trucks, and crossovers. And so that's what gives us confidence. When we put our guidance together, there is so much talk about what might change from a regulatory perspective, from a tariff perspective, what happens from an IRA, that we said, assuming a stable policy environment, that's the results we think we can deliver. Now, we know there's going to be some changes. We've done a lot of scenario planning, and we know the levers that we can pull to minimize any impact. But, you know, having the opportunity to talk to the president, I really believe he wants a strong manufacturing sector because it's good for the economy. And so we're going to continue to focus on making sure the administration understands the implications of some of the decisions that they're considering. But I believe over the mid to longer term, there's a focus on strengthening manufacturing in this country.
Mary, when you had the opportunity to talk to President Trump, did he understand that a tariff might impact demand for autos? I mean, how do you frame a conversation like that and get the point across saying, hey, this might impact American jobs and it might send car prices higher in this country?
Well, I think he very much understands exactly, what the ramifications will be, and I think they've been very clear that they want to make sure there's the right and balanced relationships with many of the different countries that they're talking about to accomplish the goals of his administration. But I do think he has a very good understanding of the implications of tariffs or changing IRA, the stringency from a standards perspective. I think he has a very good understanding of all of it as it impacts the domestic and U.S. auto companies and the overall manufacturing sector.
Hey, Mary, Pras here. So speaking of that domestic market, the EV business doing quite well for GM. You're hitting that variable profit target that you guys were talking about in Q4. Big deal there. How did you achieve that? Was it mostly a scale thing?
Well, scale certainly played a big role, although we had lower scale than we thought based on demand because we are going to continue to balance production with demand. But I think there was a lot of elements, improvements from a battery technology perspective, looking at our vehicles and how do we not take away anything that would impact the customer, but how do we drive more efficient solutions? We've talked about winning with simplicity, and that actually allows us to go to market in a way that I think is better for the consumer because they're not having to make so many choices. So it wasn't one thing, it was a number of things, but scale's a big portion of getting to that variable profit positive.
Yeah, we just got out of that Equinox EV, pretty impressive for a car at $35,000. Also noting that GM is saying that you're going to hit possibly a tailwind of $2 to $4 billion in that EV business based on how things are going, based on the amount of cars you want to wholesale. How does the potential loss of an EV tax credit affect that guidance?
Well, we do think that there is a potential for EV demand to go down without the consumer tax credit or some of the other aspects of IRA. But remember, we started on our EV journey before we even knew IRA was going to be was going to be legislated. So we're going to continue on our journey to continue to take costs down, provide great electric vehicles as well as great ICE vehicles, but great electric vehicles that customers want to have. And we're seeing that because we're growing share on both the internal combustion and the EV side. So we think that that's going to allow us to maybe, in this case, take a larger share if there's a smaller EV market. And we'll provide updates through the year, but we definitely see savings with all the work that we're doing internally.
Mary, this is an administration really focused on boosting energy consumption or domestic energy consumption in this country via oil drilling. I mean, as you think about your production timelines, is GM going to be making gas-powered cars for longer? I know you really want to get to making more, really predominantly EVs by 2035, but do you see yourself as mostly a gas-powered car for the next couple decades?
Well, we have said that we have plans in place to have all of our light-duty vehicles be electric by 2035, and so we have a plan to accomplish that if that's where the consumer is. But we also have the opportunity to continue to make, new models of our great ICE portfolio, and we're really excited about our full-size trucks and SUVs, the new mid-size crossovers and compact crossovers from an internal combustion engine side. So again, our portfolio gives us the opportunity to give consumers choice, and that's what we're in the business of doing.
Hey, Mary, so looking sort of internationally, in particular China, that business sort of going through a transition there. I know you guys took a big charge in Q4, but then also I'm noting that there was some positives that happened in the business there. What's your outlook on China, and how do you compete with those really efficient automakers?
Well, I think we have the opportunity as we work with our partner to implement the restructuring plan to get our capacity in line with what the demand is, to get our inventories. That's really what drove a lot of the opportunity to get to equity income positive in the fourth quarter. And so as we continue to execute that plan, we're looking for China to return to profitability this year. And we think we're going to be set up to participate in what is the largest market and has growth potential as we get to the medium term. And we think we've got the right portfolio and we'll get the right structure of the business. So that's been important work that we put into place in fourth quarter and will continue to execute throughout this year.
Mary, real quick before we let you go, on the EPS guidance for this year, if there is any form of tariff, does GM fall below the bottom end of that earnings range, or how should investors think about it?
Well, again, without knowing exactly what the tariff will be, how long it's in place, or what other changes come with it, we provided guidance based on what we know today and what the environment that we know today. So that's what the guidance is. And, I think what we've demonstrated over the last many years, though, is an ability to be agile and flexible and adjust. And we're going to stay focused on delivering the financial results to make sure that we're doing the right thing from a business perspective and for our shareholders.
All right, well, leave it there. GM Chair and CEO Mary Barra, always nice to get some time with you. Appreciate it. And thank you to our very own Pras Subramanian for joining the conversation.